Yo, 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 yo. Test, test, test. Audio's good. Notifications should be not ear blasting like they were before. How's everyone doing? Yo, yo, yo. All right, we'll wait a couple minutes. People tend to struggle behind. But yeah, a lot of interesting stuff to talk about today. A lot of times midweek stuff is kind of boring, so this is a nice change of pace. Indices have been taking a beating the last few days, huh? Like looking at SPY. I'm not really taking a beating, but definitely seeing some red, which is interesting because it's one of the first times in a while indices are pulling back while Bitcoin is breaking up. And for the longest time, for many, many months, they've basically been in lockstep, you know, like not on like every little micro move, but you know, the downward moves, the grander moves, you know, up usually carries Bitcoin up as the dollar drops. And this week has been the opposite, which is very interesting to note. All right, so let's go ahead and let's start off by looking at the dollar index as we always do. And as I do that, I notice that Costco is rejecting this upper boundary. This is why we wait for entry signals and not just blindly long into stuff, right? All right, so let's go ahead and start off by talking, howdy. Let's go ahead and start off by talking about the dollar index. The monthly close is nearing. We have only a handful of days left. And as we near the end of the monthly close, we can start looking at the monthly candle, see what it's doing, right? So at the moment, the monthly candle is chilling right at this level, this well-established zone for the last few years. And by few, I mean 40, right? This zone right here. And what I've been looking for specifically on the monthly is a close below this red/gold zone here. And if it closes anywhere near here, that is exactly what I would be looking for basically a rejection of this level. If you're new to the stream, long story short, we don't want Dixie to bounce, because if Dixie bounces, everything else will pull down. But if Dixie does drop, that's going to pave the way for a lot of bullish activity on equities, on gold, you know, metals in general, right? And definitely on crypto. So, been watching this for the last couple months now, and this thing moves slow as shit. So, you know, we have to wait months and months. But it's finally nearing. We got 2 days and 5 hours left on this monthly candle before it closes. And if it closes something like this, this is a really good sign, right? So when we look at the weekly, we can see that it's kind of just been bouncing on this zone. Got a good bounce. And 2 weeks ago, it actually closed a lower low. So if we look at this from like not the candle perspective, but line chart, you can see very clearly it closed a lower low. But for me, this isn't a good enough signal that it's going to drop. I want to see the monthly candle close down there. And at the moment, it's doing, you know, it's set up for that. And it does, you know, I've seen this posted around a couple of times. It has like this weird head and shoulders dealio, like left shoulder, head, right shoulder. I don't know how much weight I put into that, just because it's like, this is such a limp shoulder with a grossly overgrown head. But the levels are there, and it looks like it's ready to close below it, right? And if it does, well, it's very, very likely that we will visit the bottom of this trading range. And if it does that, well, let's look at some of the times in the past when Dixie did that, right? So Going back to the beginning, well, let's go back in chronological order, right? So starting here, March 2020, all the way to January 2021. Anyone who knows their Bitcoin history knows that that was this bull run right here, right? So we got March 2020 to January of 2021. It's like all of this stuff here, right? Let me go back in time again. We look at this guy right here, January 2017 to January 2018. And again, if you know your Bitcoin history, that is January of 2017 to basically this, right? So it stands to reason that if we get a prolonged move downward on Dixie, we will see an accompanying upward move on Bitcoin. It's been really choppy the last, I don't know, basically this whole year. But it is overall trending up, right? There have been many occasions when I thought it was going to pull back lower than it did, and I've been wrong. I'm perfectly fine to admit that I've been wrong. I'm happy to admit that I'm wrong. I'd much rather trade a bull market than a bear market. Bear markets blow. Personally, I enjoy shorting, so I don't mind it. But I just mean it blows in terms of like the overall sentiment of things. Like people tend to, be very disengaged and less friendly. So anything that moves down here is a-okay with me. So let's go ahead and make some notes here. All right. Boom. Notes. Oh, no. I got to move my notes over here. I've been having to do some like jerry-rigging with my Streamlabs. I don't know why, but it's like it's just sucking. All right. So let's do Dixie. And if you're new to the stream, all these notes that I make, I post them to my Discord, which you're more than welcome to join, and it's free. And you can find that link here. So if you're interested in just watching the stream and not copying down my notes, you're more than welcome. I'll do the heavy lifting for you, and I'll write down the notes and post them for you. Okay. Let's look at monthly, and we'll do weekly. So monthly Dixie. We have, what did I say, 2 days left. 2 days left. Let's make some notes. So 2 days left until the monthly close. This means we need to take a closer look at the monthly levels and candle close. Okay, so basically, on Friday, when I stream on Friday, we'll have a closer look at this because it closes in, it'll close that day. Friday market close at 4 o'clock. Or I guess it's 5 o'clock, right? Because it's Forex. 2 days left. Currently, we are positioned to break the 40-year-old zone we've been watching forever, since forever. A break of this zone would likely yield a move to the bottom of the macro Dixie range. Target equals 89. Let's just say 89.5. 89.5. We'll say this too. Note, historically, strong downward moves on Dixie are extreme, in all caps, extremely bullish for other assets like crypto. And we'll go boop boop. That way it'll be in bold. Okay. So we want to watch this, right? Weekly. I mean, weekly is basically just a different flavor of the same thing, right? When we look at the weekly trend is definitely bearish, right? We have, you know, if you're looking at cloud metrics, for example, we have this Kumo twist, which is a bearish move. We have now the Tenkan, which is pierced the cloud, price is under the cloud. All this stuff says downward trend incoming. Cloud metrics all say down. We'll say price under cloud. We'll say this, price and Tenkan under the cloud. Bearish Kumo twist. And what else? Kijun in the cloud and trending downwards. Okay. Also, when we look at things like the Bollinger Bands, I was a little sketched out at this move right here, where you see the green fella getting bumped off, but we're trending, you know, pretty closely. I would be more alarmed by this green move if it did something. Let's see if I can find another example. If it did something like this, where it completely detached and went sideways, but the fact that we had a little bump and we kept going, this is more along the lines of something like this, where it comes down, bounces, and then it reattaches. So I definitely want to see a weekly close attach to this lower band, because that's going to be an indication of a strong trend. But, you know, baby steps, right? So we'll just have to keep an eye on this. And essentially what we're looking for is the stronger the bearish trend on the B bands is, the stronger the bullish trend on Bitcoin will be. So we want to see a decisively strong move to the downside, not something that just kind of waffles around, you know, something like this, for example, or, you know, chops around. We want to see a decisive move, right? But it's set up there, and sometimes it just takes some time. So no worries there. B bands saw a temporary rejection of the lower band, but we are heading back down for a potential reattach of the bands. Okay. So lots of good stuff here. All right, so with all of this in mind, let's go and take a look at crypto, because crypto is what everyone actually cares about, right? So when we go to Bitcoin, no surprise, humongous bounce, right? From the bottom, the bounce was like 10% or something like that. Yeah, 10%. And it occurred at a logical point, right? So it occurred on a retest of the daily 50, also the daily 600 EMA. For those who don't ever look at the 600 EMA, highly recommend it. The 600 EMA tends to be like a sort of waterline, and this goes back forever, right? So this was like the floor of the 2018 bear market. This was the ceiling that broke before leading into the 2020 bull market. And this was, once again, the floor of the 2022 bear market. So right now, if we flip this, this is really good. This is very bullish, and it has me very, very optimistic. We've seen several potential breakdowns that didn't play out. We see this 4-hour rising wedge, which I've talked about ad nauseum, rising wedge here. And the fact that we reversed and we've already cleared the breakdown level here, this to me is a failed breakout. Typically, sometimes you'll get throwbacks to rising wedges, but not when it moves like 70% to the target. The target was down here, right? And it's, well, not 70%, but it's moved a good chunk of it, right? It moved, I don't know, more than 50. So anything that throws back to this to me says failed breakdown, and that is a bear trap, right? So right now, the bears are starting to get trapped. If you shorted anything down here, you're now underwater. If you shorted this breakdown, you are now underwater. And so this is a great opportunity for the bulls to really crush the bears here, right? So if we want to see strong continuation here, and that's, the conditions are set there. We see good volume expansion. We see really nice spread. All of these things are good. We even saw negative funding down here. The negative funding, so I shorted like right up here, and then added on the breakdown. And then I end up closing. Like once I saw the negative funding, I saw this big green candle here, big volume. And then we see the Bollinger Bands breakout. I immediately flip long. This is not something you want to fade. The trend is, of course, up. Never, like if you're, just a general rule of thumb for shorting anything really. If you're shorting, in general, you want to be shorting in downtrends, right? But there are certain scalp opportunities and swing opportunities for mean reversions in uptrends. And so the moment something, if the trend is up, the moment you short something and it shows bullish, early bullish signs, get out of Dodge, because especially in crypto, like you will be quickly punished. And any short gain that you had during this gets quickly evaporated, right? We've seen this over and over again. Here, for example, here, you could have been short for days and days and days, basically almost a week, and then in one day it just evaporates your short. So any short exposure that you take, definitely want to be looking for invalidation and be kind of babysitting it, honestly. Can I explain the negative funding? Do you mean like conceptually, or like what I mean by negative funding? Oh, negative funding? Yeah, so negative funding on derivative exchanges like Bybit or BitMEX or whatever, anything that you can get leverage on, there is a funding period, and typically it's like 8 hours. So so funding, we'll just break this down real quick. So funding is every 8 hours you have to pay a fee, and typically, I guess I don't need to write this down, but every 8 hours or 4 hours, it kind of depends on the exchange, but in general, it's 8 hours. Every 8 hours, when you have, you want to write it down? Fine. Funding. Every 8 hours or so. Depends on the exchange. Funding. Every 8 hours or so, it depends on the exchange. There is a funding period where I'm just going to say any loan you took, long or short, leverage, accrues interest, or sometimes you can actually get paid. Accrues interest or pays you interest. So in general, like whenever you see like the positive funding, what that means is that there is more bullish. The amount of people taking out leverage, like, so if you're looking at like a balance, right? So here's the scale. If you have positive funding, that means that the amount of people that have out margin positions are net long. And if you have negative funding, that means the amount of people that have funding is net negative. So if you have negative funding down here in a downtrend, that means that there's a lot of people that are suddenly getting short down here, right? This whole move down, there was positive funding. I know because I was watching it. And once things become just a general rule of thumb in crypto, if you have an uptrend, anytime you have negative funding, they almost always get squeezed out of position. Almost always. Here there was negative funding, they get squeezed out, and that's why there's these big impulsive moves. Here they get squeezed out, that's why there's a big impulsive move. And anytime you have negative funding, the market tends to punish them aggressively and stop them out of their positions. Hey, can you take a look at daily Bitcoin, at Bitcoin daily and check volume? My man, that's what I'm doing right now. Calm your horses. Do you think we can pull back on lower time frame? And if so, where's a good place to enter long? Yeah. So I don't know why you're saying there's no volume. There's definitely volume. Daily Bitcoin. So that's another indicator I use. Yeah, it's not really an indicator, but it's definitely something that I've noticed more often than not. Anytime I'm short and I see negative funding post on, post on exchanges, that is a good sign for me to be like, okay, I'm going to look for something that's going to squeeze me out of my position. And the moment I see bullish activity, because sometimes, it can be negative funding and it'll go down for a day or two. But very rarely does it go down for more than a few days. So, it's it really, if I'm, God damn it, my brain is scrambled right now. Okay, so if I'm short, like I was, right? I got short. I'll tell you what day it was. I got short here. I think it was like Thursday or something. Oh, Tuesday. I got short on Tuesday. So I held the short for a week. And what was nice about that was the funding was positive, which meant that I was getting paid every single day or every single 8 hours. I was getting paid out like, pretty small amount of money. But rather than me paying interest, I was actually getting paid by the bulls for their long positions that were getting dunked. However, if I'm short and the trend is up, if I see negative funding hit the books, what I'm looking for a manual exit of my position is something bullish to take place, like this, for example, that breaks market structure, has high volume, and ideally has something like this, where I'm like, oh, this is a new trend. I see the B bands squeeze, the market moves up, we see negative funding. That says to me, close your short and possibly flip long, or at minimum just close your short. Is there a chart that tracks funding? Yeah, there's several websites that will just like aggregate all of the different exchanges. Or you can just look at whatever exchange you're using. Like it'll just post it at the top. But going back to, going back to the original question, do I think we can see a pullback on lower time frames? Yeah, of course. Typical pullback. So my general strategy for either adding to a position or getting in on a position that I missed the long entry is I look for taps of the 15-minute 50 EMA. That's always a really, really good tap. And what's good about that is so it's good and bad, right? If you look at this, it never tapped at once, right? But I promise you it will. So the bad thing is you sit there and you're sidelined. Cool. But the good thing is almost always the first touch of the 50 EMA following a strong breakout. This is why I have the 50, the 200, and the 600. If you have a stacked configuration like this, this is by my metrics a strong uptrend for scalping, right? Strong uptrend. And so what I look for is an opportunity when the market will mean revert to this 50. And almost always when you're in a bull market, an upward trending market, this first 50 EMA will provide support. And we can go back and look at this throughout history, right? So when the market does stuff like this, this is a sign of weakness to me, right? You see the first tap provides support, but it quickly fails, and we can get into that later. It's not as cut and dry. Like there is nuance to it, but in general, like here for example, right? Boom, boom, right? Then when the 50 fails, the 200 provides support, right? And it does this kind of thing over and over again. Here, boom. So it's a pretty reliable, like, oh, I'm late to the party. Do I want to buy the top? Do I want to buy a breakout? Sometimes buying breakouts can be kind of scary, right? Or the 50 catches up. Yeah, if the 50 catches up, then yeah, it'll still usually like bump into it or something, right? Okay, so let's make some notes here. BTC, kind of all over the place. So let's organize our thoughts here. So daily, actually, let's go to weekly. So weekly, I'm currently still kind of sketched out by this move. The fact that Dixie hasn't closed below, hasn't closed its monthly candle below here, and the fact that the weekly is kind of bouncing on this thing, does have me kind of skeptical. The weekly is obviously looking bullish, no doubt about it, but it's generally unadvisable. It's generally a bad idea to just long into resistance, right? This was confirmed resistance, right? So we have this zone here. We see this bearish engulfing candle last week. This confirms the resistance. And it's generally not a good idea to long into resistance because it can do this choppy thing like this for fucking ever, really, right? I mean, that's what we saw back here. And you can just really get your feelings start getting chopped to shreds, right? So you can handle this a few different ways, but the main takeaway here is we are at resistance. Closing a bullish engulfing on the weekly would be sick. That'd be ideal, and most likely that would coincide with a rejection of this, a breakdown of this Dixie support. And if that happens, then cool, full steam ahead. We should also look at the monthly candle, just because. Get this fucking magnet off my screen. Just because the monthly for Bitcoin closes in 4 days. Important milestones here. We have this B-band midline. The B-band midline, similar to the daily 600 EMA, tends to be a water line. And when I say water line, I mean like if you're above the midline, you are trending bullishly, and if you are below the midline, you should be really skeptical of bullish rallies. So when we go, let's find, when we look at the monthly B-bands midline, it tends to be a really good indicator of macro strength, okay? So anytime we get closes above the monthly midline, it tends to lead to upward moves. Here's an example here, right? An example here. And vice versa. So if we get bearish closes below the midline, tends to lead to a downward move. Boom. Right? Pretty straightforward there. So if we get a monthly close above this midline, that'd be amazing. And we have 4 days. Like we could totally do it. It's not that far away. So monthly close would be 32.8. I mean, that's not far. So 32.8, if we look at it and, oops, if we look at it, oh, God damn it. If we look at it more zoomed in, 32.8 is just right here. Like, we could totally close a monthly candle up here. And if we do this, I would fully expect a move to this upper band. If we get a monthly close above this midline, I would fully expect the market to run to this upper band. Those are logical targets when you close above or below the midline. All right, so looking at different examples, obviously this failed to move to the lower B band, but closing above runs to the top, closing below runs to the bottom. Here, again, right? I am skeptical that a move to the upper B band would yield an uptrend. And the reason why I'm skeptical is, let me rephrase this, okay? Although we would target this, right, which is a massive move, I'm looking at this relative to the monthly candles, right? So if we get a monthly close that runs to this upper band, I am skeptical that it would do something like this. And I think it'd be more in line with something like this, where it runs to the upper band and drips back down or consolidates or does something else, right? And that's purely because the B bands aren't consolidated. So here, when we ran to the upper band, the B bands were squeezing. Here, when we ran to the band, they weren't very squeezed at all. So if we run to this upper band, it just represents like a pretty much a lack of consolidation in the market. And, you know, maybe it runs up here and it kind of just like does this and then goes, like, totally possible. But essentially, I'd be looking to take profit on any long on a touch of this upper B band. That would be my my end goal there, and probably looking for either hedges or macro shorts, right? Okay. Oh, got a gifted sub. Oh, thanks, Nick. I think you get one every time. Is there a bull flag on 30 minutes for Bitcoin? I don't know. We'll take a look at it in a second. I need to catch up on some notes here. So there's a lot of important stuff. All right, monthly. We are just below the monthly B-bands midline. Midline. If we close above the midline, that would be a strong indication that we are going to run to the upper B band. Target equals 57.9. $57,900. Oops. $57,900. And that's, I don't need to tell you that. That's a 2x move from here. Okay. It should be noted that if we come up, like, so say we close somewhere around here, like, that doesn't necessarily mean it's bearish. What I definitely don't want to see is I don't want to see a wick above and a close below the midline. That would be sketchy. That would definitely be sketchy. But, yeah. How much time will it take? How much time will what take? Well, there's 4 days and 6 hours left on the monthly candle, right? So we have 4 days and 6 hours to close above 32.8. Upper B band above the midline. Let's make that so 32, approximately 32,800. right? 32. No, not 32,800. It's less than that. 32,200. Is that a dead pixel on my monitor? No. Okay. Okay. Now let's go down to let's drill down to the weekly. So weekly doesn't look half bad. Okay. It was looking pretty sketchy for a while because this guy right here, this bearish engulfing candle. You're on Bitstamp? Yeah, it's fine. I'm not looking at volume right now. I'm just looking at price action. That's all right. So if we mess me up. All right, so last week closed a massive bearish engulfing candle, right? And I think that probably trapped a lot of shorts on the close. People watching macro positions probably either closed or hedged or whatever. And it set up a potential Bollinger Bands M top. However, if we close a bullish engulfing candle, that invalidates that. So if we get a weekly close, which again is in 4 days and 6 hours, if we get a weekly close above this high, that invalidates this reversal and likely means that we're going up, right? So let's write that down. So 2 weekly. Last week closed a bearish engulfing candle. Last week closed a bearish engulfing candle. Okay. We are currently running back the entire breakdown from the prior high. If we close a bullish engulfing, that would invalidate the okay. There was also a B-Bands M top reversal playing out. If we close a bullish engulfing, that would invalidate the B-Bands M top and would likely yield a strong continuation to the upside. Okay, so we'll leave it at that. This is a great bull trap going on into the end of the month. Why? Why do you think it's a bull trap? What makes you think it's a bull trap? End of month things. Weekly hasn't even closed yet. Yeah, no. I mean, that's why there's a contingency upon the closes, right? But here's the thing. It's generally a bad idea to think that rallies in an uptrend are bull traps. Like the trend is very obviously up. And just assuming it's a bull trap is probably not a good idea. So if we close above the 32K, the echo bubble thesis is invalidated. I don't know what that. What is? I don't know what that is. What is the echo bubble thesis? All right, so for the daily and below time frames, following a breakdown of the rising wedge, previously targeting 24.5, which was here. It was targeting down here. The daily candles found support on both the 600 EMA and 50 EMA. Finding support on these logical EMAs is a good sign of a healthy uptrend. Smiley. Okay. What else do we want to say? We have already, let's say this. All right, so the breakdown, like the breakout level, was 29.5. The market broke out of the rising wedge at, shit, I already forgot it. What did I say? 28.5? 29.5? At 29,500. We aggressively stopped out anyone who played, or let's not say that because we don't know if they're stopped out. Anyone who played the rising wedge is now underwater or has already been stopped out. This represents a failure of the rising wedge reversal setup. And I say it's a failure because, right, it only made it 50% of the way and reversed. And so here's the other, the main takeaway from this, right? Anytime you have bearish setups that fail bullishly, that is always a good sign of a strong bull market, okay? Or at least the early signs of a bull market. There were plenty of, like, here's an example, right? So here was a bear flag that played out. And then bam, turbo nuked it, right? This was a head and shoulders in here. You know, some kind of head and shoulders, not like the cleanest one. Boom, nuked it. Rising wedge, massive rising wedge. Boom, nuked it. There was another rising wedge that was in play forever ago. Where was it? Something like this. This is kind of why rising wedges suck, honestly. Because they're just like, you can just draw them a million different ways. Boom, played out, bam, reversed. So all of these things are just, they're just basically bear traps that just keep nuking them. And you know they're bear traps because they keep getting negative funding. And the negative funding almost always gets punished, right? I'll also say this. Prior to the reversal, there was negative funding. Negative funding in bull markets almost always get aggressively punished. Rising wedges. Yeah, dude, rising wedges do suck. The only thing that sucks more than rising wedges are falling wedges. Falling wedges, dude, in crypto, I've seen falling wedges work out like -2 times. So falling wedges is like the counterpart to the rising wedge. So falling wedges would be something like this. And they usually should do something like this, boom. But almost, like without exception, this thing does shit like this. Boom. I've never seen a falling wedge play out. Rising wedges will play out a little bit. Very rarely do they hit their actual target. But they just tend to be like this. This tends to be a bear trap, and falling wedges tend to be bull traps. But they just kind of suck, really. You're just not very reliable, right? All right, so we got 65 people watching here. So if you're not sure what's going on, we're talking about crypto, and I'm making notes over here as we step through the market. If you want a copy of these notes, you can join my Discord and get them there. I post them after every stream. And yeah, you can go get them there. That way you don't have to like copy them down, and you can just hang out and just watch a stream. This is a bull market. I mean, it depends on the scale on which you're looking at it. On the 4 hours, it's a bull market, definitely, right? On the daily, is it a full market? On the daily, is it a bull market? Basically, it depends on what metrics you use. So if we're looking at EMAs, not quite yet. Traditionally, anytime you have a golden cross, this represents a bull market. But by my standard with EMAs, I include the 600 EMA because it's such a long moving average. So for my standards, I consider a bull market on the daily time frame to be a 50 EMA on top of a 200 EMA on top of a 600. So we have the early workings of it. We have the 50 on top of the 200, but it's not above the 600 yet. However, if we're looking at things like the daily cloud, yeah, this is a bull market. It doesn't get much more bullish than this. So it kind of depends on what metrics you want to use. But it's very clearly the trend is up. It's been up the entire year, right? Like to say it's not in a bull market is silly, right? Since the beginning of the year, it's up 82%. If that's not a bull market, like what do you want me to tell you? When we're looking at the weekly, no, not a bull market yet. In order for a bull market to take place, like, yeah, I have the same standards for my 50 and my 200. I mean, I guess technically it is a bull market because it's above the 50 and the 200. The 600 EMA on the weekly is like, it's not enough history to even use it. But in terms of that's why I usually use the cloud on the weekly. In terms of the cloud, what I would like to see as I move through the cloud, and until it moves through this, the cloud is basically just resistance. So until it breaks through the cloud, weekly is not in a bull market, and monthly is definitely not in a bull market, right? Monthly is like just kind of doing its thing. How long are you trading finance markets / Bitcoin? I've been trading Bitcoin since 2016. So, what is that, 7 years? Something like that. Can you make volume analysis? My man, you will not get off this volume stuff. You fucking love volume. WDYT. What is? I don't even know. What does that mean? What do you think of the weekly 50, 200 EMA? Are you saying MA? When you say MA, is that EMA or SMA? Those are two different things. Are you saying EMA or SMA? Oh, SMA? I don't ever look at SMA. Let's go ahead and throw it on here. Boom, 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 boom. Get rid of you. SMA. Is there not simple moving average? Oh my god, what is this shit? This is not what I wanted. Oh, is this a collection of them? Oh my god, get out of here. We're not doing that. Why isn't SMA at the top of the lifts? Smoothed moving averages? What is that? Is the S and SMA smooth? I always thought it was simple. Huh. I'm gonna get another one. All right, 200. All right, you want to look at the weekly? There's no 50, 200 EMA cross. Oh, SMA cross on the weekly. There's no cross. You're probably thinking of the EMA. Unless smooth moving average is a different thing. Should be at the top. But if this is what you're talking about, it's not there. So do I do any analysis on ETH or just Bitcoin? Have you seen my logo, my man? My logo is an Ether logo. Yeah, I do Ether. You're using CryptoWatch. Don't understand why it's different. Yeah, I don't really like CryptoWatch that much. I mean, I know they've like recently had a facelift or whatever, but in general, I don't like Kraken. I'm like morally opposed to them. They can kiss my ass. And I mean that with a passion. Yeah, okay. Well, there's that. Prior to the reversal. All right, let's go back to what we were talking about. That's good enough, right? Okay, we can do your volume analysis, for the love of God. All right, so daily. I mean, yeah, volume is pretty low, but we're not making new highs or anything. It's fairly low, but relative to the moving average, it's above. So it's not the worst thing in the world. I would like to see larger volume than this, though, personally. But sometimes it just takes time. Like if we look at prior bull markets, like the volume was pretty low. The volume was pretty low. And then usually as it breaks market structure, the volume picks up. Right, so if we go down here, boom. We see the uptick in volume, but you know, it's not like exceptionally low. You don't understand why people were so bearish in the last days. Nothing bearish could be found in the chart. Disagree with that entirely. Here's the last few days. It was literally a whole week of red. I don't really know what you're talking about, but it dropped 13%. That's a lot. Indices are super low volume too. Yeah, so that's actually not surprising to me that indices are really low volume. They've been in basically like a year or two of consolidation. So it makes sense to me that they would be. So if we look at like SPY, for example, SPY, or let's go back to where we were. If we look at S&P futures, right, like it's been in this massive consolidation for a year now, basically a year. So the fact that it's low in volume, like that's not a big deal to me, especially since it's making higher lows. And it keeps hammering this level. I'm actually bullish on indices. You can only hammer a level so many times. Like if we flip this upside down, for example. right? If we flip this upside down, this would look bearish. Boom, 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 boom. Just this bouncing ball that keeps just dribbling off this floor, and this floor is going to break. So when we look at this the other way, this looks bullish to me. Now, looking bullish and being bullish are two different things. I would personally wait for the breakout of this. There's a lot of things going on this chart. If we look at like the weekly, for example, we look at the cloud, it gets almost a full cloud breakout. And I want to see this thing outside the cloud. That would be great. B-bands, you know, it's still squeezing, right? But I want to see a strong move to the upside. And now that the monthly candles are closing, you know, of course, I would even want to see a close above the midline. Like, that would be ideal. But yeah, any questions on Bitcoin before we leave that behind? I'm bored with talking about Bitcoin now. We can talk about Ether, though. What about a possible head and shoulders forming? Where? Do you want here? That would be like the Quasimodo of head and shoulders. My man's got a massive hump. I wouldn't look at this like a head and shoulders. If anything, I would look at this like a reaccumulation trading range. I would look at this like this. Something like that. We've seen a similar setup to this in the past. So I'll show you. This is a really common pattern, actually. A lot of people don't know about this, but I'll show you this. So if you look at it on the daily, it kind of cleans up a bit. Right, shoulders invalidated. Yeah, exactly. But this is a common thing. We see this, boom, boom. So look at this is what I want you to focus on. We come up and we come down, and then we rally. Look at the 600 EMA on the daily. Yeah. So remember this pattern, right? The pattern is this. It comes up, boom, boom. Okay. Where it does not break this level. Okay. Remember this pattern. Look familiar? A similar one here. These are reaccumulation trading ranges, and they tend to be very aggressive on the breakouts. Probably find a few more too. They're really common on low time frame. Like we saw one last night, for example. We look at the 15-minute chart. Or no, we didn't. I guess not. But I'll find you a few more. They're really common. I say they're really common. I can't even find one for you. Well, you'll just have to take my word on it. I don't feel like scrolling anymore. You just have to take my word on it. But yeah, that's the general form it takes. You can see all these people that shorted all this stuff. They're trapped. I would expect... I really wouldn't want to see hesitation here. Like anything that comes down here would kind of be sketchy to me. could it BART pattern again? I don't consider this to be a BART thing. BART is more like this, right? This is more of a clear trend. Yeah, I mean, I guess hypothetically, of course, it could always do this for sure. That's what I'm saying. I don't want to see hesitation here. This should be a clean continuation to the upside. Like, we want to see it breaking things like this, where it just goes bam, bam, and it just cascades through all these levels. Like, that's ideally how this setup should go. So any hesitation here would be, I wouldn't want to see that, because then that would just be a lower high, right? And maybe it does end up being a monthly close bull trap. So anything that shows hesitation here is sketchy to me. That's why I would watch the 15-minute chart. If it fails this guy, that wouldn't be very good, would it? Okay, let's go and look at Ether. So Ether, similar to Bitcoin, running into a huge level, or a huge zone rather. Yeah, it shouldn't give chance to people who shorted to get out. Yeah, exactly. It should move up and aggressive. It should not give them an opportunity to like get out on a dip like this, right? It should just move up. What the fuck? My computer just freaked out. It should just move up and aggressively trap them. That's exactly right. And that's what it's doing here. It's just like anyone who shorted any of this stuff down here, boom, 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 it just traps them and traps them and traps them. So anything that comes up here and pulls back, that would be a sign of concern for me. All right. So anyway, going back to Ether. Currently, still, same thing as Bitcoin, still below its zone. For Ether, though, something I really don't like is it made this really clean Adam and Eve double bottom. It broke out and immediately dumped the breakout. I don't like that. That is exceptionally sketchy, and the fact that it's like chilling at the bottom of this zone also is sketchy. I don't like that.